Assalamu alaikum warahmatullahi ta'ala wabarakatuh. Good evening, good afternoon, whatever time we afford you are watching this video. And I hope you're doing so well here. So today, I want to talk about lesson called high of the day, low of the day, high of this and high of the season, high of the week, low of the week, high locket, low locket. Okay, in order for you to understand this one, you need to understand basic information of price action, guys. So how the basic information price action works. So going to daily time frame, every month has three levels. Every month has three levels. Very high. Last month close. Last month low. In this particular case, you must understand what does that mean. Last month high, last month close, and last month low. That's monthly. You're going to use that data every new week of a new month. When the month open, but every week you're going to use three levels of weekly and H4 time frame. Okay, when you're using monthly information, you're going to use like here, last month high. This what last month high, right? And last month closing price, right? So this is actually is monthly level. What do you need here? Where the weekly candle close above level, where weekly candle close below level, where weekly candle close inside, where weekly candle close. You need to understand the monthly level and importance of weekly candle close above. That's going to give you what you call breakout, high time frame breakout. So when you get that breakout, then easily you can work from high and low. But if you don't understand that basic price action principles, somehow it's not good. Somehow it's not good. You need to understand the basic levels, and you need to understand if the market close and breakout, if the market close not breakout, how the market close inside, consolidation inside. You see, when the market close inside, it's called consolidation. You see, guys. So when you understand the market, let me say here this week market close above monthly closing price. You understand here? Also the monthly high. What about monthly high? It was monthly high. This was they were up range. So the market actually closed above. This week closed above. This week closed above. Friday closed above where? That's telling me the market is bullish next week. Are guys together? So when you understand that, easily you can apply the weekly cycle, and you can apply what I call high and lows. So the market is on the breakout, the direction is bullish. Let me say here, last week the market, and what we do last week, market recovery. We're going to use that data of last week high, last week closing price, and we're going to use last week closing price. Are guys together? So actually the market Mondays market is not closing outside. It's not actually you have to wait. Most of the time Mondays I like to wait Mondays. I suggest you wait Mondays. Why? Because somewhere somehow Monday will close above the closing price, last weekly closing price, or it will close above and below, or it will go inside. That's going to tell you consolidation week, guys. Okay, then from there you can apply your high and low. So You understand? In this particular case, Monday close above. We have got the confirmation of what? Bullish breakout above the levels. Guys, together. Above levels were last week high. Where last week closing price. Okay. When we understand that, now we get our direction market in a breakout. That's price action principles by levels and by breakout. Okay. From there, what we need? From there, what we need to go to H4 time frame or H1 time frame. Actually, H4 time frame is the best. H4 time frame is the best for weekly cycle. Okay. The market. I said trending market. This was trending. All right, was up trending. And I always say, in order to identify the new trend, always look historically. The price was bearish trend and create bullish trend. You see again, the market again create bullish trend and create bullish trend. I got together bullish trend. Okay. The most wondering part is here. When the market create hedge for bullish trend, the hedge for time frame actually market create 3 levels. You will see most of the time. You will see the market create higher high, level 1, level 2, level 3. The market create 3 higher highs before drop. Also here, every time the market created, the market give you higher high 2, level 3. It's a cycle of market maker before coming back. See our guys together. So hedge for time frame, hedge for time frame. What I use actually, I use a trend form, trend direction, bullish trend. Okay. So when I use the bullish trend and hedge for time frame, I use 3 levels. Hedge for time frame, I using 3 levels. I'm using level 1 push, level 2, level 3 before drop back. Okay. Coming back to 15-minute chart. I get all that information in my mind, and from there, I want to use what 15-minute chart. 15-minute chart is here. Go to Mondays. Monday. Let me say I was waiting Mondays. Okay. Let me say. I was saying Mondays because of a trend, of the strong trend market, So when the market was dropping, I call this one high of the week. I call this one also low of the week. How are you going to see low of the week? That's number 1 question. That's the question you need to understand. So for market to give you high of the week or high of the session, whatever it be, you need to understand here. Market is high, market come back and log the low. Listen here carefully. And market going back and log the high. Are you guys together? From there, the market coming back to low. They fail to break new low. Then from there, they go back up. So this high is where the import is. So when the last low, let's call it the last low before the down move. Last low. This low, at the moment they break this low, is a time the market going to go blow off. That's the time the high. When the market creates high, market creates low, and when market retests the low, market retests the high. That's the time the high and low is available. But when trend is shifting when the market fails to break new low or fails to break new high and create last low high, then break the new low high. That's the time the market creates new trend. Yes. What's your problem? Hello? Yeah. What's your problem? What do you want this time? Are you mad? I'm sleeping, man. Hello, Jay.
Six foil.
Huh?
6 foil.
Sorry?
6 foil.
For this time?
Yeah, man. Yeah, man. No, you can't close it.
I'm sleeping, man. You mad?
Yeah?
Thank you.
No, close it. I come up here.
Give me a leave. Sit. I wish now you guys understand what I'm trying to say here. I see here. So let me go back to when the weekly open here. Go back to H4. It was high. This is low of the week. Low of the week lock it. This one, pull back. You see, it was a high, last week high. This is a last week low. Alright? So this one is what? Low of the week lock it. The market retest. Are you guys together? Then the market tried to create new low, but fail. After fail, what do you see here? Last lower high. Before the down move, the market broke. Breaking this area, tell me so far the market is going to be bullish. It's going to be bullish. Are you guys together? Like I say here, last week high, last week low. In some cases, the market come back. Create low, like last week here. Okay, they lock the low, they go back, they try to make new low, but fail. That's telling me now this market is about to go up. But for me, what I need here, I need the market to go back to create low, another low, and break this area. After breaking this area, I confirm the market went to high. This telling me now the market locked this low. This telling me now the market refused to go low. This telling me now the market going structure break. Are you guys together? This is a time what we call 3 levels of market maker starting. The 3 levels of weekly starting from that, and 3 levels of market maker is what? 150 pip, 150 pip, 150 pip, or 250 pip, 250 pip, 250, 750. So that's why the gold move is crazy every week. Gold 3 levels is like that. Are you guys together? So it's 450 to 750 pip. to make high and low of the week, Monday, Tuesday, Wednesday. Sometimes Monday, Tuesday, blow off and make it high. You see, sometimes Monday market is going to make high. Sometimes it's going to make high like Monday, Tuesday, Wednesday, Thursday, 5 days. You see, are you guys together? It depends. It depends, guys. Okay. Okay. And let me say here the structure tell me is bullish. Monday I buy. I want to buy. Let me say Monday I want to buy. Okay. Last Monday I want to buy. So I go to 15-minute time frame, and I'm sure H1 time frame tell me now the market will go to 3 levels, level 1, level 2, level 3. Before 3 levels, I have to wait to 3 levels of rise, or I have to follow the market. I've got to go. Also, H4 trend is bullish. Strategy is bullish. Okay. I go to 15-minute time frame. I go to 15-minute time frame, guys. I go to 15-minute time frame. Okay. I go to 15-minute time frame. When I go to 15-minute time, what do I see here? What I see when I go to 15-minute time frame, simple. What I see here, yesterday high of the day, low of the day, inside low highs, lower high, lower high. What's this? Lower high. Position is swing low. Okay, the new day started. The market create low. We get what? 3 levels here. Closing price. Last week closing price. Yesterday closing price. Last week high. Oh, this we get here. So what we want here? The market need to in 3 levels. What happened here? They break out. They put back the trend. So in this particular case, breaking out daily level is here. We need to get H4 candle closing above. H4 candle closing above. Daily level is you need what? H4 candle closing above. H4 candle closing below. This is what? Daily level, right? So this is daily level. So H4 candle is close above. As you guys together. H4 candle close above. That tell me now. This one confirmation. This one close above. This tell me what the market want to go buy. Also this one actually close above the breakout. Closing price above closing price. This one above close above. And second one close above also. Higher. Okay. First is we're gonna give you already confirmation here. As market close here. Daily level is you're going to use H for candle confirmation. It's basic price action, guys. Weekly level is you're going to use what I call here. Weekly level is you're going to use daily candle confirmations. Daily level is you're going to use H for candle confirmations. Monthly levels you're going to use weekly candle confirmations. Simple, easy as like that. To confirm breakout and bullish breakout. But that's only one rule. Understand what I'm saying? Yes. Okay. So for me, in order to trade from high and low of the day, high or low of the week, I need to draw how market how to draw up. So for me, same process. Market creates high, market creates low, market retests the low, market go back up. When there is a low, they go back up. There is a high, they come back down. They fail to break new low. Same rule apply. Again, they're going to put new lower high. This is going to be what? Last low before the high. Breaking this area, this is a time for momentum, guys. It's time for momentum. So what do you see in the chart? When the new day starts over here, market create low. Market stop create small high inside. Market try to come down and create lower high. Fail to go lower. You see, it's a time they're going to create lower level high, short, lower level high. The time they break this area, create higher high or the flow activated impulsive entry, pullback entry. I'm in the market. Are guys together? In that particular case, the market going upward 100 pip. What do you call here? 3 levels of rise. 3 levels of rise. But how the market behave, you need to know what the market behave and identify a live market condition, guys. This level is candle confirmation, breakout, price action, basic price action, then how price behave. Okay, after the market, give me this leg, second leg W. The market give you first leg W, second leg W, this one. On what? On first entry criteria. This is a 20 moving average, guys. I'm using 20 moving average. I meant to use 20 moving average, guys. 20 exponential moving average. So second leg W on your direction. The market go up 300 pip move. Is 37, 67, level 1 starting. 3777 level 1 finishing. Level 2 is 3787. Target level is 57. Level 3 is 3797. But now on level 3 do not counter trend. Since back always say do not counter level 3 means the market can still fly. Because why? The market going up to 3 levels of the weekly. It's Monday open, right? The market going to weekly ADR, weekly levels. That's why 150, 150, 150. The market didn't stop. Let me say 150, 450. So let me say 150, 150, 150. So 50. So the market is still flying. You see? That's why you need to know this information. The ADR is where market goes to. So actually, me, I don't trade above the 3 levels. As I trade gold, 300 pip. If I catch that 300, 200 pip, maybe I catch 150 pip. I don't even catch the 300 pip, but I want only 150 pip that move. Out of 300 pip, I just want to save 150 pip move. Finish, guys. I've guys together. Let's call it the 3 level started of the structure. After this high and low format, market create low, market create high of the day. So far, market lock the low. See, lock the low. How? They retest the low. After retesting the low, they don't want to make new low. That means they are locking the low. Then if they break the last lower high, last high before the low, that's a time is confirmation the market is no longer bearish, it's bullish now. Are guys together? So you can use also trail and breakout. You can say, and you can also that's where trail and traders make mistake here. They don't know this information, guys. That's a problem. This was all the trend. It's bullish trend here. Also, you can say here another trend. New trend joining the first trend. First trend was bullish. Now new trend joining other trend. Easy. Then you need to know the market rally for 3 levels of rise. Level 1, level 2, level 3. And 3 levels based on the calculations. Gold, rally, 100 pip, 100 pip, sometimes 75, sometimes 50. It depends. Like ranging week, trending week is 300 pip. Ranging week is like maybe 75, maybe 50. Nobody knows. But when the market is ranging, they can do that for 75 or 50. Actually 75. Minimum 250 pip, guys. So I wish now you guys understand the other information here. Okay. We go back to Tuesday. Tuesday, what we get? We get here enough information. Last week high is here. Last week closing price is here. So man, Tuesday what we get? We get a bullish breakout market. We get confirmation of the weekly bullish breakout. The market is going to break out. Okay, no problem. Instead of doing pullback, the market decided to just go up. So because market is strong bullish, okay, no problem. So what do you see here? They should come back and keep going up, but now they decide to just keep going up. Okay, so how you gonna approach this market, guys? Like this day, I don't trade this trend, because if I trade this sometimes they used to come one stop hunting and keep going up. So I used to blow my account and say no, I'm waiting. If they come back, I take them. If I keep going up, I take reversal because I know they want to pull back. Okay, are you guys together? Okay, how I know they're about to reverse, mark? They're about to reverse. Simple. Yesterday high, yesterday low, high and low. That's what high and low area. This market was creating high highs, high lows. Are you guys together? Inside lows, high highs, high lows. This high low area. So that's a high low until they break high low. The market still keep flying. Okay. And instead seeing that the market is not high, breaking highs. Breaking yesterday highs means they start creating high. They start creating low of the day. Are you guys together? This is the low of the day. But they didn't start creating the strategy I want to see. I want to see them, they create high, they create low, they create high, they log the low, I need that information. But instead of doing that, they keep flying. Are you guys together? So instead of flying, let me say they do this in 5 minute time frame, 1 minute time frame. Let me say here they did this maybe 1 minute time frame, 5 minute time frame. And still now 3 levels of price. You see, it's 15 minute chart, but 5 minute chart, if you go there, you will see some price action, Some price action, the market create high, the market create low, the market retest low, the market give you last lower high, as high before the low, then give you what? 3 levels of rise. Again, in a 5 minute time, 1 minute time frame, guys. Okay, remember market is a strong bullish breakout. Strong last fast hedge for candle. Look there. It was the daily level, right? It was the daily level, right? This was the daily level, but I need confirmation. 1, 2, 3, 4. Fast hedge for candle close above. Means it's still bullish. Our guys together, still bullish. But how? It's going to create a high of the day. Just creating high of the day, guys. Creating high of the day. Okay. When you go look for time frame, lower time frame, market high, market create low. See, when you go 5 minutes time, you will see this information. Lower level low. They want to make new low, still creating high. So they go up what? How many views? Let me see, I count from 46, 56, 30 from here. As you get enough data, 1 minute time frame, 5 minute time frame. They break this high, right? After breaking this high, 30 from here. 38, 28, 38, 38, 38, 48, 38, 58. After these 3 levels is finished, the market is about around high of the day. So how buyers behave? How buyers behaving? The market getting racing wedge. A New York session, London session. So you can expect come back to the low of the day. They even call labs. Why they doing it? Go to hedge for time frame. When you go to hedge for time frame, this was the low of the week. They hit high of the week. They stop here, keep going up. They hit high of the week. So each low need to be locked. They're coming back or retesting the low of the week. So guys, together. So one candle move is they retesting or locking low of the week, guys. See, sometimes they exceed, sometimes they, but the rule is here always to lock low of the week, always to lock high of the week. They need to go back. That's why they come back to the low of the week. So if you don't know they come back to low of the week or they go back to high of the week, you will not be able to catch that move, guys. You will not be able to catch that move. I've guys together. So if you really know that the market finish also 3 levels of rise, you really know you cannot be able to catch this move from here because market is strong buy. I've guys together. Money trader was buying, but me I was expecting sell. Why? Because I know the market retested the lows. They need to lock the low before going up. I've guys together. But whatever go up must come down. You see, it's about 600 bip. You just need 300 bip move here. With the full size, a lot of money. They got a lot of money, guys. Are you guys together? So this time they lock the low again. This time they lock the H4 low again. They lock H4 low. Last low of the week lock it. Are you guys together? So they come to lock again. They're still going up. Come on the second day. A market also closing bullish breakout. Second day bullish breakout. Are guys together? So doing that, what we need the same process apply again. Go 15-minute time frame. We stay in high. Yesterday high, week low of the week. Are guys together? The market trigger yesterday high. Trigger breakout triggers the market again. The market give us high of the day and give us low of the day in the new day. The market is still coiling above what? Around the closing price level, which is daily level, guys. So fast hedge for candle close above. That's confirmation for more buy. Our guys together breakout. Our guys together, they come back to low. They lock in the low. They come back and lock the low, guys. So always, if you know they come back to low, they lock. How you know they lock? They come back rejecting. They come back rejecting. They come back rejecting. They still locking the low. Are guys together? So where's my entry? They lock high, they lock low. They lock high. So where's your entry? Your entry is last lower high before the down move. You see, they don't want to break new low. They don't break new low, right? So your entry is here. After moving average, it was entry criteria, guys. So then from there, you go up the 3 levels. The market go up for 3 levels, count it. 58, 58, 58, 68. Level 1, 58, 78. 58, 88. What do you see? They go up 3 levels and stop it. Guys together. So knowing this information, you can catch a small move, guys. The full size, a lot of money, a lot of money, a lot of money. High and low, lock it. High and low don't want to go down. The market create high and low. Again, the market lock the low. Again, the market don't want to create new low. Guys together. The failed swing failure. Then from there, how you enter? The enter is last lower high area. Break it up the candle, high bull candle. You're in the market, guys. Free cash with a moving average crossover. Moving average, universe entry criteria, guys. Very dangerous area, but the market is going to go this direction. If you know what you're doing, then where's my trend system? If you drop trend line here, it's called trend line, bullish trend line. Again, the market creates what? New bearish trend here. new bearish trend here, and market create new bearish trend. So X trend is bullish. The new trend is bullish, become bullish. That's why when the two trend meet, that's time the market is strong momentum kicking, guys. Easy. This market actually keep flying. Why? The X trend was bullish. Also, new trend, continue bullish, become up. Bye. You see, both trend, the farmer trend or X trend, and new trend is meeting. The momentum is kicking in to the direction. Guys, together. So this particular case, go back to H4 time frame. This was last week low, low week locket. Okay, market create new high. No problem. Market create new low, but this low not a small pullback. Oh, not enough locket. You see, our guys together. So they come back. They set to new locket again. Our guys together. So they come to the side this day again. Go back to 15-minute time frame. What they did here? The trend was bullish here. The trend became bearish. So what do you need here? In this particular case, the trend became bearish. Alright? Okay, break a trend line. But market also create new uptrend here. So what you need here? The market needs to stop the trend. When they stop this trend, then you go in this market and follow the trend. Of guys together. Free cash. How are you gonna know this market will pull back? 3 levels. Count the 3 levels. The market in the same day, high day, it was yesterday high, yesterday low. So that's gonna be what? This is around what? Low high area. High of the area. Okay, that's what yesterday's information. Alright. The new day information, what I want. Okay, the new day information, the market create low of the day, market create high of the day. The market log the low of the day, they pull back, they start creating breaking up. Okay. They also come back again to log the low again. Okay. So alright. This is doing good. You show me something I know. Okay. Great. So this information I wanted. So breaking up this area, they go up for 3 levels against it. So the 3 levels sometimes gonna be the trending direction, sometimes it's gonna be stop hunting back to trend direction, guys. So 100 start from here, 61, 71. Alright, 81, 91. Alright guys, together. Same area of 91, the market starts dropping. So when the 3 levels is finished, the market starts consolidating or dropping or rallying up, down. It's easy. It's easy. So you can catch serious trade guys. I catch from the sales, forgot free cash. A lot of free cash was there in, guys. So you can catch this move same like me, guys. But you need to fix your knowledge. Okay. Friday, the market keep going. Why? This was a low of the week. Okay. Low of the week locket. Again, market high of the week. This was high of the week also. Low locket, okay. Again, market decided to lock again low of the week. And again, the market is on a bullish breakout. It's what last week low, right? Last week closing price. So Monday close above. Tuesday close above. Wednesday close above. Thursday close above. What do you can expect? The market is still in a strong bullish breakout, guys. So in this particular case, yesterday, Friday, is what I say, you go to 15-minute chart. High of the day, low of the day. The high of yesterday, the low of yesterday, pullback level, high level long. That's data from yesterday, right? The new data from market is high of the day. they retest the low, they break the low again, new low of the day. Now it's lower high of the day. Okay, so the market tries to retest, and what is she put here? They retest the low, they don't want to make a new low. That tell me now, hey, there's something is fishing. Last low before the high, breaking out that area, the market, the trend is bullish, the trend is back. I say here, bullish trend, also here, the bullish trend. So they keep go up 300 pips. I say here, they go up 300 pips. From 38, 44, I say they go 3 levels up. 44, 54, 64, say it'll be 74. The market will go 74. They go 74. After 3 levels, level 3 will come trend. Sometimes it's gonna give time. They shift the market strategy to new bearish or bullish, or they start consolidating, or they somehow they not go move nowhere. So keep the master process like that. Master the process that simple way, guys. Master the levels, master the breakout and confirmation is, and master high and low, how the market create high and low, how the market you have to know the market create high, come back to low, and lock the low. You see, the market create high, lock the low. That's how the cycle work, guys. It's weekly cycle work for H4 time frame and intraday time frames. Add things together and started mastering the 3 levels of rise of the way of the day based on mathematics. 100, 100, 100 for gold. 75, 75, 75. 225 if guys. Or 50, 50, 50 sometimes can be. But I don't think gold is 50, 50. Like Euro USD, it can be 50, 50, 50 guys. Or GBUSD. But gold is starting from 75, 75. Because gold ADR is 250 bip. $25. Our guys together. $25 or 250 bip guys. Daily average range or 450 weekly ADR. $45. 450 or sometimes 750 per weekly guys. $25 market to go up to go down to create high of the week, low of the week. Our guys together. So master process like that, keep it simple like that, keep it simple, and master market view. Assalamu alaikum warahmatullahi wabarakatuh. I hope this video helps you and you'll be better trader next time. It's about understanding the trend in trend, the levels. You need to master the levels first. You need to master the levels, understand the breakout, important breakout with canal confirmations, understand the trend in trend is important. The trend against the trend, two trends meeting, trend against trend, see, it's very important. And 3 levels and structure, how price behave in live market. Very simple. But it's not simple. It takes me 3 to 4 years to master this information. Because why? I master high and low, I'm missing levels. I master high and low levels, I'm missing the trend in trend. Add things together, slowly by slowly, is now where I am. Add things together, slowly by slowly. It's all about patience, guys. It's nothing easy comes. So master the process. The process is simple. If you master the process, it's simple. But when you align, it's very hard. So keep it simple, terrorists. Madam Makfi, salam alaikum wa rahmatullahi. So I'm about to sleep, guys. It's 1:30 already. But I was requesting my friend here today. Please make for me video about your killing the gold. I need to also want to kill it. I say, yeah, you tell me about some guys who trade AMD. Me, I don't know that information, guys. I keep this high and low symbols because that's too much information. Me and my mind is too small, man. I know. I only respect the price action, levels, price action, breakout, the trend in trend, the high and low. I buy low, structure, and how price behave in live market. Finish and color. From there, I buy low, I sell high, I manage my risk, I take my profit. I'm not greedy. It's all about that. If you can keep that simple, it will be simple. If you can't keep that simple, it will never be simple, and it will take you long time to process. It's like me. It was simple when I mastered it, but when I was mastering, when I was trying to learn you, the process was long, guys. 3 to 4 years, guys. It stays back information I see 2021, and I only see the result is things are getting together 2025, 24, late of 24, guys. Keep it simple. Keep it simple, guys. Keep it simple. It'll be simple. Especially 2025, this year, I'm keep getting better because all the things are lining up. Last year, the thing started clicking in my mind. See, then this year, the thing started improving. It's not easy because now you need to add things together. Guys, together. So keep that simple. I think it's simple. It will be simple, guys. I wish you guys good luck and good skill, but I wish you guys this video help you a lot. But you have to master the process, please. You have to master the process. If I show you here, number one, the video I
already. Today we're going to be talking about the high voltage.
the video, the small information I started.
So again, we're going to look at some examples of how to use 3 levels of rise or fall each day to understand how that can play out and allow us to identify the number levels of where a market may be starting to end its move or where it's working back.
You guys hearing what I've seen? Where 3 levels is starting, where 3 levels can end the move, then you know at least the market will go there. You see, 3 levels is very important because it's about and you will
into a level.
understand the leverage and the breakout and the structure, how price behave. Then you will understand the 3 levels. Before, it's not easy. I've been.
We talk about day 1, day 2, day 3. The easiest way to remember that is Monday, Tuesday, Wednesday. So I start the week fresh every week. That zero range day could be on a Friday, it could be on a Monday.
This man is he telling everything from the mouth, but not explaining. This high of the week, low of the week, the market start from here. No. So I take that information he telling from his mouth and change into the knowledge, guys. That's why it take me very long to master the process.
Could be on a Tuesday, it could be at the low of a Monday, the beginning of a Tuesday, or vice versa for the peak formation. It's typically when a market is going to lock in a level, put a peak formation in place, or...
So guys, together. So what I say here, when I was saying here, market high and low, and market need to pull back and lock the low, lock a high, then I know it's creating big formation low. Then I wait for the structure. Last low before the high, you will say.
Trap volume over successive pushes without going any lower and then breaking above.
Without going any lower. That's why I say I need to see low, I want to break new low. I want to see high, I want to break new high. It's swing failure, guys. You see?
The last high before the low, or below the last low before the high.
You see that? Last high before the low, that low, they want to create new low. Swing failure, that's the time the market shifting to bullish and give you power of move. Or last high before the low.
That's the easiest way to understand when that level 1 may be beginning.
Level 1 my beginning. See, it's about but when you listen that from his mouth, you need to take the right thing from his mouth and take into the knowledge. Practice, and it will click into your mind, guys. Keep it simple, it will be simple. I wish you guys keep getting better, keep learning 1%, 2%, 3% per month to 5%.
So again,
It will be simple. It will click into your mind, guys. Just try to master the how I follow this, guys. Then it will be simple for you. Keep it simple, serious. Madam,